very good morning. You're watching Market Cafe on ET Now. It's me, Snehisha. With me is Vinny Motiwala. Vinny, very good morning to you. And well, this is a show where we're going to take you through everything that has been happening in back home as well as in global markets after market close yesterday till bright and early this morning. And in the second half of the show, we'll also get a little stock specific, talk about all the stocks that could be potential buzzers in today's trade, as well as the one that brokerages are flagging off for us. So on that note, let's kickstart the show then. And Vinny, not much happening in the US markets. Flattish moves coming in, but inflation data important to watch out for today.
Absolutely, that's what we're keeping an eye out on, because US did have a mixed close that came in. While Dow Jones saw a decline of almost 0.4% in trade, we did have the S&P 500 and the Nasdaq, which managed to see and close with some bit of a positive sign. So yes, Nasdaq closed up almost 0.2%, while in terms of the S&P 500 closed almost flattish in trade. Now, obviously, what we're seeing is gains came in for technology, so that's why Nasdaq was up. Oil and gas, utility sector, that was among the top gainers there in terms of sectors over there. Consumer goods, industrials and financials, that was leading the losses and saw a sharper decline. Overall, when you're looking at the best performers that came in terms of Dow Jones, we kept out for the names of Walmart, because yes, that was in focus after we saw the numbers come out for Walmart. Other than that, we also had let's keep an eye out on Apple Inc. that was in focus as well. And in worst performers, we had Boeing that saw a fall of almost 2.25%, Procter & Gamble that also saw a decline of more than 2%, and Intel Corporation, among other names, that saw a decline of almost 1%. We had Nvidia also, which performed well. So the AI company which is there, the chip maker that is there, that saw good performance gains of almost 4%. So, because the tech stocks did well, we're seeing that Nasdaq managed to hold on to better gains versus the Dow Jones or the S&P 500. As of now, when you're looking at the stock futures, US stock futures seems like a bit of a flattish move that we're seeing. The inflation data in the US is going to be a key to watch out for. The 2% target, they're still far off from that, but obviously everyone's keeping an eye out on that, in which direction the inflation data is moving. Though on the India front, yesterday when we did have the data point, it was an interesting one, a positive move there. So yes, better than what everyone was expecting in India for the inflation. Is that the case for US? Everyone's going to be keeping an eye out on that. But let's move on, talk about the European markets as well. European markets have also closed a bit mixed. We're seeing DAX, very muted day of close that came in, slight bit of a positive bias. FTSE closing with gains of almost 0.5%. In UK also this week we'll be seeing the inflation data. So across globe, the key point is going to be inflation data, and that's where the rate cuts start coming in from the central bank. So all eyes on that. So staying as of now, even Nifty implied open, what you're looking at is a muted start for India. We've seen a mixed close coming in from the global markets, keeping an eye out on how India actually performs in trade today. Given that our inflation data wasn't bad, maybe we could
data pretty decent coming
yeah.
in
So then it could be possibly that we could actually again one more time outperform the global markets. Is that the case? That we'll be surely keeping an eye out.
Well, here's hoping for that. But on that note, let's also quickly take a look at what oil and other commodities have done yesterday. And first up, let's take a look at what the levels are looking like as of now, because we did see quite the rally coming in for both WTI as well as Brent crude. But all of that has simmered down. It's all cooled off as of now, because WTI also touched 80. In fact, it rallied quite a lot yesterday, touched more than 80 and now has receded. 79.62 is where WTI oil is right now. Brent also at 81.8. So actually what's key to note is that WTI and Brent not very far away from each other as of now. And as of now, WTI, Brent both trading with cuts of 0.5%. But we also had lots to talk about actually when it comes to oil, lots of factors to watch out for. We did have the OPEC report also coming in. We'll take you through what that said also. But other than that also, you had lots of factors, because Brent also gained, yes, more than 3% on Monday. US crude futures had risen more than 4%. In the meantime, geopolitical conflicts, they continued to take charge, because you had the Middle East conflict that has escalated with the US preparing for what could be significant attacks by Iran or its proxies in the region as soon as this week. And White House National Security Security spokesperson John Kirby, this is what he has said on Monday. Now, any attack could tighten access to global crude supplies and boost prices. An assault could also lead the United States to place embargoes on Iranian crude exports, potentially affecting 1.5 million barrels per day of supply. And this is what the street is largely penciling in as of now. Markets are also preparing for Wednesday's US consumer price index. Like Vinny mentioned, lots of crucial information will be relayed when this inflation data comes out. Investors now worry that an overly depressed CPI number will fan fears of a downturn. Now, let's understand why rate cuts and oil, what relation they have. Rate cuts tend to raise economic activity, which increases the use of energy sources such as oil. Now, the US dollar is also marginally edged higher yesterday after 2 days of losses. A stronger greenback helps demand as oil becomes more expensive for foreign buyers. So on one hand, you have demand supply factors, then you also have US inflation coming in, and then you also have geopolitical factors playing in when it comes to oil. But you know what, let's talk about the OPEC report that has come out. OPEC has trimmed its global oil demand growth forecast for 2024, reducing it from 2.25 million barrels per day to 2.11 million barrels per day. Now, the revised forecast comes after weaker than expected data was seen in the first year. It is also attributed to slowdown in China's oil demand growth. The reduction still leaves OPEC at the top end of the industry estimates, but in contrast, the IEA, which is the International Energy Agency, which represents industrialized countries, they see much lower demand growth than what OPEC is expecting of 970,000 barrels per day in 2024. Now, the revised forecast underscores a cautious outlook for the year ahead. So, amid all of these factors, you also now have OPEC that's come in and has trimmed its global oil demand forecast. IEA obviously not agreeing to that. So, lots actually at play when it comes to oil. Quickly shifting focus, let's also take a look at what gold has done. Rather flat, not doing much, but yes, 2,505. So, just nominally above $2,500 per ounce is where gold is. So, not much happening on that front as well. Crypto is also Bitcoin flat. Ether, however, 4.5% higher. So, well, yes, watch out for oil, gold, as well as everything that happens in cryptocurrencies as well.
Moving on, let's look at the important cues and events that we're watching out for. Global front, obviously in the US, inflation data. In the UK, jobless claims, unemployment data. That's the important one to watch out for. Global earning, we do have Home Depot that will be reporting their numbers. While on the domestic front, 3 Nifty companies, Hindalco, Hero Moto, as well as Apollo Hospitals. Last 3 companies on the Nifty 50 that will be reporting their numbers today. So important to watch out for. Obviously, there are a lot of other Nifty companies, non-Nifty companies that will be reporting their numbers, keeping an eye out on HAL. We have Hinduja Global, Entero Healthcare, among some of the other names that will be reporting their numbers. Move on and talk about some of the corporate action we're keeping an eye out on. HEG board will be mulling a stock split. EIH, the company will be meeting to execute bonus issue in the ratio of 1:1. Keep an eye out on that. We have SJVN, Gulshan Poly, GMR Airport, among others, meeting to consider fundraising plan, as well as GE Shipping. It's the last day to be buying the shares for GE Shipping if you want to be applicable for dividend. 2 new listings, let's watch out for that one. We have a BrainBees solution, obviously, which is FirstCry. That is opening up in terms of making its debut on the D Street, as well as Unicommerce, which is a SaaS platform company that's also making a debut. Other than that, we will have some commentary coming in from some of the Fed presidents overnight. Keep an eye out on that. CAS is going to be hearing the verdict of Vinesh Fogart on the silver medal appeal. So all eyes on these important events that we're keeping an eye out on.
Absolutely, lots to watch out for. Let's also shift focus, talk about all the big global stories this morning. Consumers have grown more confident in July that inflation will be less of a problem in the coming years, according to a New York Federal Reserve that showed the 3-year outlook at a new low. In fact, the 3-year portion of the survey showed consumers expecting inflation at just 2.3%, down 0.6 of a percentage point from June, and the lowest in the history of the survey going back to June 2013. Remember, these results come with investors on edge about the state of inflation and whether the Fed Reserve might be able to reduce interest rates as soon as next month.
Okay, surely keeping an eye out on that. Let's move on. And the US government recorded a $244 billion budget deficit for the month of July. That figure is up by 10% from the last year, but accounting, I beg your pardon, accounting for calendar difference, the gap would have been $45 billion, which is narrower. Now, the nominal increase was largely the result of lower than usual benefits outlay that was there last July, and for Medicare in particular, especially, is what we're keeping an eye out on. July receipts were at $330 billion, up 20% from last year, but adjusting to deferred tax receipt would have been up 12%.
Alright, let's shift focus, talk about the automobile space, because global sales of fully electric and plug-in hybrid vehicles rose by a yearly 21% in July, thanks to China's strongest growth this year and despite dropping demand in Europe. In the European Union, MG Motor, owned by China's SAIC Motor Corp, expects to be hit hardest by provisional tariffs imposed on EVs imported from China. The impact of the tariffs should be smaller for the likes of Tesla, which can produce in the Berlin factory, and Chinese EV giant BYD as well.
And move on, a Mercedes Benz EV caught fire on August 1st in South Korea's Incheon, and today the country's top ministers held a review as the incident sparked safety concerns amid EV owners. Let's go across to Sumit Chaturvedi, who's joining you with us with more details on that. Sumit?
Well, South Korean officials met in Seoul. Well, the meeting comes in the backdrop of EV catching fire on August 1st. It was a big incident in which one EV of Mercedes Benz caught fire. It led to bigger fire that resulted in about 100 other vehicles burning as well. And this prompted authorities to come together, and that happened. They are discussing now the automakers to come and talk about more safety measures, also disclose the battery brands used by them. Well, tomorrow the automakers will be called by all these government officials. Automakers include Mercedes-Benz, Honda, Hyundai, Kia. All of them will be called. Well, the fires are serious in nature because EV burns different from what an ICE or internal combustion engine will burn. EV burns it lasts long. The fire lasts long, and the batteries involved. That's why there are occurrence of fires as well. In this particular case, on August 1st, and Mercedes-Benz electric vehicle caught fire, led to bigger catching of fires by different vehicles, and that's what prompted authorities to come with these new norms can be announced as well. But this kind of vehicle fire has caused a lot of uncomfort among the officials, among the government, and that's why the automakers have been called tomorrow. New rules can be announced, and they could be told to disclose the batteries that are used in electric vehicles.
Alright, Sumit, thanks for all of those details. But we also caught up with Horma Sorabji, the editor at Autocar India, as he speaks about the EV fire and its challenges and what are the battery safety parameters present currently. Let's go across and listen in.
Yeah, I think, EV fires are very different kinds of fires. They clearly, there's something called a thermal runaway. So when they catch fire, it's very, very difficult to put them out. It's because it creates a trigger reaction. So, one cell then combusts or ignites the other cell, and there's a chain reaction within the battery cells. So that is very difficult to put out, these lithium fires. So clearly, it's not like a normal fire, but so there are challenges when the vehicles catch fire, but, they're getting far and few between as, let's say, people get more experience with EVs. There are, better battery design. There's better battery management systems. There's better crash protection, all that sort of thing. So battery fires are getting less common, actually. I think there are basically regulatory standards. So there's nothing like you can't rate them. They all have to meet a very stringent, let's say, safety standard. So I think basically, I think what can be done to reduce fires, there's more R&D being done. There's stricter quality control. Then there are regulatory standards. So there are tougher global standards for battery, safety and the crash worthiness. There are different ways of thermal management. There are more effective cooling systems. So I think there are several things that are being done. So even there's better battery design as well. So I think the standards are already there. Like, for example, in India, they are the toughest standards, very, very tough standards. In fact, those standards have actually delayed the launch of some vehicles because there's so many parameters where every cell has to be tested. So I think, it's more to do with having more stringent, let's say, test standards for batteries that will reduce the fires.
Let's move on, and we were keeping an eye out on that exciting interview Elon Musk with the Republican presidential nominee Donald Trump. Now, obviously, the billionaire Elon Musk, that interview that was going to be taking has been hit by a major tech issue. Remember, Trump returned to X for the first time in nearly a year and shared several campaign videos. The richest person in the world has endorsed Trump for president and has been involved in fundraising efforts for the Republican. Interview comes as Trump's arrival for the White House. Kamala Harris has been riding a wave of momentum in the US media.
Alright, on that note, we'll slip into a very short break on this edition of Market Cafe. When we return, we'll take a look at how the Asian markets are faring this morning, so you stay tuned. Hi there, welcome back. Still watching Market Cafe on ET Now. As promised, let's take a look at what the Asian markets are up to. And first up, let's highlight what Japan is doing, because major indices in Japan have gained more than 2% just this morning because they've resumed trading. They've come back from a market holiday yesterday. Remember, Japanese markets were closed for trade yesterday. Now, Nikkei jumped 2.5% higher just at open. It, remember, breached 36,000 for the first time since 2nd of August, but seems to have tempered down a little bit from there. But nonetheless, 2.4% uptick coming in on Nikkei as well. Now, Japan's corporate goods price index rose 3% in July from a year earlier, in line with what the street was expecting and climbing at a faster pace compared to 2.9% in June. And on the back of that, Japan markets are doing really well as of now, almost 2.5% higher, but slightly under that 36,000 level. Now, let's shift focus, talk about what South Korea is doing. And Kospi dipped 0.2% on open, but very flat as of now, not doing anything is Kospi in trade. Australia's ASX 200 rose marginally at open. Let's just see what Australia is up to as of now. Continues to hold in the green, but well, yes, not much happening. Just a 10-point uptick coming in on ASX as well. Now, Hong Kong's Hang Seng Index kicked off the trading day with a 0.25% gain, and right there, not doing much, not moved much. In fact, since where it opened, a 0.25% gain coming for Hang Seng as of now. Lastly, let's also take a look at what Shanghai is doing, and a very negative, slightly tempered 0.1% cut coming in on Shanghai, but just a 2.5-point cut coming in, so not much to worry about on that front as well. So overall, largely flattish moves coming in from the Asian markets, but Nikkei outperforming its peers. Now, when we talk about Nifty, yesterday we shut shop at 24,347, implied at 24,333, so indicating a subdued start for us. But well, we'll just have to buckle up and see what the trading session holds for us, Vinny.
Absolutely, but let's move on, and whether it's a Welcome back. You're watching Market Cafe on ET. Now, let's move on to the domestic front. And India's retail inflation cooled off to the 59-month low at 3.54%, significantly down from the previous month's 5.1%. For the first time in 5 years, inflation came in lower than RBI's 4% target, and food inflation also moderated to 5.4%, its lowest since June 2023. We discussed the latest data in terms of inflation points with the guests, and we did have some of the updates that came in on that front. We did have Saugata who spoke to us on that front, so listen in.
RBI governor was very, very clear, as was the MPC statement, that as far as they are concerned, the rate setting body, it is the headline inflation, including food inflation, for various factors that he's laid out, because primarily the inflation expectations channel would lead to further problems if you were to start excluding food inflation, high food inflation. That's number one. So they are going to stick to headline inflation. The base effect, particularly, I'm not just talking about the food inflation effect, I'm talking about core inflation, the non-food, non-fuel. We have hit the bottom we had hit the bottom last month, in the month of June. So from now on, food inflation will core inflation will probably start increasing, as we have already seen in the month of July. So this is going to be another feature. I mean, because we are going to end the year with core inflation back at about 4%.
See, what's happened is there are two areas here. Core is at 3.35, 3.4%. Prior was a record low of 3.1, where telecom tariff hikes, in our view, have played a role. We'll do a deep dive into the data. On the other hand, when it comes to food inflation, so core, we were at around 3.4, 3.45. It's coming at 3.35, broadly in line. Telecom tariff hikes, in our view, have played a role with the kind of steep hikes seen in early part of July itself. But on the other hand, it's the food inflation that has surprised us on the downside. Our estimate was around 5.3%. It's coming at around 5.06. See, veggies, sequential momentum, 14% is in line. It's food ex veggies that have surprised us a bit.
Okay, let's step away from inflation and talk about the big news that trickled in yesterday from RBI. Now, the RBI has reviewed regulatory framework for deposit-taking housing finance companies as it seeks harmonization of regulations applicable to HFCs as well as NBFCs. Now, the new regulations will be applicable with effect from 1st of January 2025. My colleague Ankur is here with more details on what this new regulation means and the rationale behind it. Ankur.
Yes, Reserve Bank of India has released, in fact, reviewed the regulations around HFCs, and this is not only done for HFCs, but also harmonization of rules between HFCs as well as NBFCs. Now, first and foremost requirement which Reserve Bank of India has put in is that 15% of liquid assets needs to be maintained for deposit taken HFCs, and this number was 13% earlier. So 2% increase is not going to happen all of a sudden, but there is a time which will be provided by Reserve Bank of India. So first deadline is January 1, 2025, and after a few months 15% benchmark needs to be aligned for deposit taking NBFCs. Apart from that, regulations on safe custody of liquid assets needs to be aligned with NBFCs, and that is the requirement for deposit taking HFCs only, but they have to maintain that full asset cover is available for public deposits as and when those housing finance companies which are taking deposits. Apart from that, if at all HFCs needs to be eligible for taking public deposits, the minimum investment grade rating needs to be obtained from credit rating agencies, and not only that, there is also a rule which has been applicable to HFCs now, that ceiling on quantum of public deposits held by deposit taking HDFCs needs to be reduced to 3 times to 1.5 times of net owned funds which are there for housing finance companies. Apart from that, Reserve Bank of India has also mentioned that deposits can now have a maximum maturity of 5 years, which was 10 years earlier as per mandate by Reserve Bank of India.
Okay, thank you so much for that, Ankur. But let's move on to an exclusive that we have. We learned from sources that the Oil Ministry has approached Finance Ministry on the possible withdrawal of windfall gain tax. What's the rationale behind this? Let's go across to Prakash Priyadarshi, who's joining in with us to give us those details. Prakash?
Yes, we are learning from our sources that the Oil Ministry has approached the Ministry of Finance regarding windfall gain tax. We are given to understand that the Oil Ministry has asked for the withdrawal of the windfall gain tax on petroleum products. In fact, several presentations have been made in the Finance Ministry, and the Oil Ministry is now requesting government to withdraw windfall gain tax on petroleum products on back of reduction in crude prices. Crude prices have been below $80 per barrel, in fact, hovering within a range for quite some time, and therefore these recommendations have been made. Along with that, the Oil Ministry also believes that the crude prices are likely to go further below, and therefore it is requesting government to take immediate action. Sources are also informing that the Oil Ministry has made three to four rounds of presentation on the impact of windfall gain tax on domestic producers' investments. And the Oil Ministry is also of the view that there is no windfall gain by companies if the crude prices are below $80 per barrel. Therefore, these recommendations have been made. And if the government decides when it comes to withdrawal of windfall gain taxes on domestic crude or something, that is going to help companies like ONGC and OIL. As you are aware that the government has revised the windfall gain taxes on petroleum crude to rupees 2,400 per ton, which is effective from August 1. And but the government has not been levying a windfall gain tax on export of ATF, petrol and diesel for last few months. Therefore, these recommendations have been made, and we are also being informed by our sources that the Finance Ministry is seriously considering this proposal, but it has given no final timeline for withdrawal of the windfall gain taxes.
All right, thank you so much for joining us, Prakash, and giving us all of those exclusive details. But on that note, we'll step into a short breather on this edition of Market Cafe. We'll be right back. More to talk about on the other side. Hi there, welcome back. Let's now take it across to my colleague Ansh, who's standing by with a snapshot of what the F&O space, the derivative space, is expected to look like and what FIIs did in the previous session. Ansh, take it away.
Yes, so if we talk about FII data, then in previous session, they have covered some longs of around 5,000 contracts. They've also added some shorts of around 2,000 contracts. So net to net, we are seeing addition of around 7,000 contracts on downside, due to which the total long position is around 51%. And we are seeing this total long at around 50% from last 2-3 sessions. So anytime we may turn net negative on downside. Now, if you talk about Nifty, then if you see the chart, Nifty has been hovering around that 24,400 level from last 2 sessions, and it has been in a consolidation pattern from last 4 sessions, and the range here is broadly around 24,000 to 24,400, this 4-point range. So it is very essential for Nifty to break above this level to become positive. Now, if we talk about index options, then we are seeing some call writing happening at 24,500, indicating some resistance around this level. Whereas on downside, we are seeing some put writing happening at 24,300, indicating some support base around this level. If we talk about Nifty Bank, then Nifty Bank is making a chart pattern similar to that of Nifty as well, because here also we are seeing that Nifty Bank is in a consolidation phase from last 6 sessions, and the range here is of around 1,000 points from 49,700 to 50,700. If we talk about index futures, then we are seeing open interest going down by almost 3%, indicating short covering, which is a positive sign. Whereas on option front, we are seeing some mild put writing happening at that 50,200 mark, indicating some good support base around this level. Also today we have Nifty weekly expiry, so we may see some volatility in banking stocks. Lastly, let's have a quick view on few F&O stocks that are in focus, and we are seeing significant long build-up happening in Voltas, Jubilant Food and Coromandel International, where short build-up for Sun TV, Balkrishna Industry and Astral. So keep an eye on the stocks.
Okay, and surely we'll be keeping an eye out on all the stocks on the back of FNOs, but do stay on with us, because you're going to tell us which are the brokerages stocks also that they have highlighted this morning that we should be keeping on our radar.
So Honasa will be the first stock in focus, as Goldman Sachs has come up with a report, and they have initiated buy rating on the stock with a target price of 570. Currently the market price is around 450 rupees, so it's like 25% away from current market price. So they are getting very bullish on the stock. They believe that India beauty transformation creates a multi-year growth opportunity, and combined revenue of 5 leading new beauty companies including Honasa and Minimalistic grew exponentially 28 times over FY19 to FY23. So this is a very positive sign for the company. Also, the EBITDA margin is expected to double over FY24 to FY30. Now, if we talk about ONGC, then CT has come up with a report, and they have maintained the buy rating with a target price of 350, which is around almost 2-3% away from its current market price. They say a higher price has been set for a portion of ONGC's gas production. The premium will cover 10% of current production, expanding to 20-25% in next 2 to 3 years. Now, ONGC's average gas price could increase from $6.5 per MMBTU in FY24 to $7.5 per MMBTU by FY27. Now, $1 increase in gas price could boost ONGC's EPS by around 7 to 8%, which is very positive for the company. Now, even Jefferies has come up with a report on ONGC, and even they have maintained a buy rating on the stock with a target price of 420. Initially, the target price was 410. They have raised it to 420. A new higher pricing has been introduced for ONGC gas production, as we discussed earlier as well. Now, this new pricing regime could increase ONGC's EPS by 2 to 3% in FY26-27. Also, ONGC's stock price is considered undervalued as per them compared to Nifty index, which is a very positive for the stock. Lastly, Aavas Financiers will be in focus as Citi has come up with a report, and they have maintained buy rating with a target price of 2,170 rupees, which is almost 25% away from its current market price. Now, CVC Capital Partners is set to acquire around a 26% stake in the company, which triggers an open offer of around 1,767 rupees per share. This financial strategy investment has been anticipated for some time now, actually, and long-term financial investor with stable management team is expected to benefit the company in the medium term. So keep an eye on the stocks.
Thanks so much for taking us through that. But one other stock in focus is going to be HCL Tech today on the back of the US investor meeting they had. And here are some of the key takeaways from that meeting. Now, the management has reiterated their FY25 overall revenue, and their IT service guidance of 3 to 5% has also been maintained. FY25 margin guidance they've reiterated to be at 18 to 19%. The margin, they believe, is likely to follow the usual pattern of improvement in Q2 and Q3, followed by a modest drop coming in Q4. This is what the management has said. Now, they expect growth in Q2 within all geographies as well as verticals, likely to post sequential growth, all segments except the FS segment, and a deal pipeline remains healthy. Order book also looks to be healthy as of now. The Gen AI impact will vary across service lines, is what the management has pointed out. They've also spoken about disciplined capital allocation policy and how they plan on continuing that as well. And they're saying that the ER&D business is already improving in Q2. So positive commentary coming in from the management of HCL Tech in the US investor meeting that was held.
Okay, HCL Tech surely what we're keeping an eye out on. But like I had mentioned before, Nifty companies reporting their numbers today. Hero MotoCorp, let's start with what we are expecting this time from their numbers. Shrishti is joining in with us for Hero Motor first, Shrishti, and then we'll come to you for Apollo Hospitals as well.
Well, Hero MotoCorp too is expected to show a good growth this time around, because do remember there has been a 13% jump in the volumes on a YOY basis. The company did take a lot of price hikes, and even the product mix for Hero MotoCorp all in all has seen an improvement, because the share of the premium bikes was seen to be increasing in the quarter gone by. If we talk about their revenue, we are expecting a jump of 10% on a quarter-on-quarter basis. 10,477 crores is what we are expecting. EBITDA expected at 1,555 crores, and the margins also expected to see an improvement to 14.8% this time around. And do remember that across all these companies, be it Bajaj Auto, TVS Motors, they have seen improvement, and similar is the expectation from Hero MotoCorp as well. And lastly, on the profit figure, we are expecting 1,184 crores. But apart from the management, the kind of numbers that the company could be posting, we will be watching out for the management commentary on how the competition is building up, how are they seeing the demand outlook, especially in the rural market, and some of the key launches that are lined up for Hero MotoCorp. We will be watching out for that. Back to you.
Shrishti, Hero MotoCorp is what we're keeping an eye out on, but also Apollo Hospitals in terms of revenues. We're expecting the revenue to see a year-on-year basis growth of 15%, margins expected to come in at 13.2%, profits expected to see a 71% growth on a year-on-year basis. Revenue growth, mainly we are expecting an increase because of occupancy as well as health co-operations that are expected to improve. 13% of YOY sales growth in the hospital segment is what is one watching out for. Let's watch out for the GMV outlook for Apollo 24/7, as well as update on the capacity expansion in Pune, Hyderabad, Kolkata, Delhi and Gurugram is what we're keeping an eye out on in terms of what is the outlook over there for the company. So yes, all eyes on both these Nifty companies today.
Absolutely. So, 3 Nifty earnings today. We've spoken about 2 of them. All eyes will be on these. But let's shift away from the world of business and talk about some other news as well. Now, with days of wait for justice and the Court of Arbitration for Sport's final verdict on ace Indian wrestler Vinesh Phogat's plea against her disqualification at the Paris Olympics is most likely to arrive today. After being disqualified from competing for gold at the 50 kg freestyle event, Phogat had challenged her disqualification at the CAS. And well, the Resident Doctors Association of AIIMS Delhi has joined the nationwide doctors' strike, suspending all elective and non-essential services, including OPDs and patient wards. The move comes in response to a call from the Federation of Resident Doctors Association after a postgraduate trainee doctor was raped and murdered at the RG Kar Medical College in Kolkata while on duty. And on to some weather updates then. IMD has predicted more showers in Delhi NCR today. The weather forecast for the national capital states generally cloudy sky with a light rain accompanied by thunderstorms. A yellow alert is in place for the next 3 days. Meanwhile, it has also issued an orange alert for the states of Kerala, Rajasthan, Tamil Nadu and Uttarakhand, predicting heavy showers during the day.
And Republican candidate Donald Trump has returned to social media platform X and is doing an interview with the owner Elon Musk. Trump was earlier banned from the platform for 2 years following the US Capitol riots on January 6, 2021. However, Trump's interview with Elon Musk started with a slight delay due to technical glitch, which Musk informed was a massive cyber attack. Moving on, US has rejected the allegations of the government's involvement in the Bangladesh crisis, including the protests in the country that led to the deaths of hundreds of people. The White House yesterday called the allegations of US interference simply false.
Well, on that note, we'll wrap it up on this edition of Market Cafe. But as we bid you goodbye, you stay tuned to the channel because the market takes all the action forward.
If you like this video, then like, share and subscribe to ET Now.